Lululemon stock is down 31% since its peak, so in this video I'm going to analyze it and I'm going to tell you if I think it's a buy right now after this plunge. I suppose you all know the company, it's pretty popular on Wall Street, but this is an athletic apparel company. Before we start, I kindly ask you to subscribe if you like stock analysis and to leave a like if you're a fan of Lululemon. So the company recently reported 2023 final results. Revenue increased 19%, but the Americas were a little bit weak with an increase of 12%, while international net revenue increased 54%. The company is still at the first innings of its international expansion. This makes it very interesting as an investment, as a growth stock in future years. Gross margin got a little bit better and even operating margin improved to reach 22.2%. Furthermore, the company repurchased 1.5 million shares for a cost of 554 million. This is very important because buybacks are going to be very important for the company's future, for the stock future actually. And the company opened 56 new stores during the year ending at 711. This instead is the fiscal 2024 outlook. The company expects net revenue to be in the range of 10.7 billion to 10.8 billion US dollars, representing growth of 11 to 12%. And diluted EPS is expected to be in the range of 14 to 14.2 US dollars, assuming a tax rate of 40%. And this guidance doesn't reflect the potential effect of stock repurchases. Management also confirmed the goal of reaching 12.5 billion US dollars in revenues by 2026. So the company is still growing, but revenue growth is slowing down. But still, the rate of growth is very good, and in the next few years, international expansion is going to give it a decent boost. Furthermore, the company is doing and is probably going to do a lot of buybacks. Right now they have a 1 billion plus buyback already approved, and the company is basically a cash flow machine. They make a lot of money. The balance sheet is just perfect. They have more cash than debt, and the return ratios and margins are impressive. Return on capital was 39% in the past year. So this business is high quality and the company is still growing. So now we are going to make a valuation because quality-wise this company is amazing. Regarding revenue, I used management goal for 2026, but I'm actually a little bit lower. And then I projected growth of 14%, 12%, and 10% between 2027 and 2029 fiscal years. Then I projected an EBIT margin of 23.3%, and I subtracted the tax rate, which I think could be around 28%. Perhaps it could be a little bit higher. Lululemon actually pays a pretty high tax rate. So I reached a net income of 2.9 billion US dollars, which in my calculation equals an EPS of 26.06. To reach the EPS, I had to consider buybacks and stock-based compensation. To calculate this, I assumed they are going to be made at an average price of 440 US dollars per share. And then I had to figure out which could be a fair price-earnings ratio for such a company, for such a stock. And I think 25 could be a fair level. Perhaps even 30 could be okay-ish, but it's a little bit too high for a conservative valuation, so I used 25, which would take the stock to 659 US dollars per share in 2029. This would mean making an annualized ROI of 14.7%, which is, for me, a little bit too low. I would like to get at least 20% per year. So even though I really like the company, I think it's still a little bit too early. I would like to see the stock lower, and then it would be a very interesting investment. If I have to invest in a single stock, I want to get a pretty high overperformance, and with a 13.7%, I don't even know if I'm going to overperform. I mean, probably it's going to beat the market, almost for sure, but not by a wide margin in my opinion. Let me know what you think about Lululemon, type a comment, and please remember to subscribe to my YouTube channel and leave a like. See you next time. Bye!